Hi everyone, welcome back to the US CPA classes for FAR. This is part 9. Finally, we have reached to the last part of ASC 606 classes. In this particular video, I'll be walking you through in detail about presentation and disclosure requirement of Accounting Standard Codification 606. Let's dive into to understand more in detail about presentation and disclosure requirement of ASC 606.
GM financial statement for you really quick. I think this is 10K. Yeah. So if you see in the General Motor financial statement, can you see my screen?
Yes, sir.
So this is actually this is like complete 10K, which I have shared with you also, right? So this is, if you see from their notes to accounts, we are starting. If you look at like like in the first class, we gone through what all comes in the financial statement, but quickly I'll take you through like financial statement. We have current year and previous year, 2 year balance sheet, but the income statement is always of 3 years. If you see 2019, 18, right? And the notes to accounts relating to P&L item is always be 3 year. Relating to balance sheet item, it will always be of 2 year, right? This is like consolidated statement of equity, which we have discussed. But now in today class, I'll just take you through very high level how the notes to accounts has been drafted by General Motors and the Microsoft. So at least you get a flavor what exactly, what all we have studied in last 2 3 classes, or what all we are going to study, how it's going to be implement in the practical life, right? So in the, if you see in the accounting policy, the policy is revenue recognition, where like if I say about General Motors, they have two business. One is like automotive business, which manufactures the car and distribute the car. And second, you can say business they have is General Motor Finance, right? In the General Motor Finance, they do the financing services for the automobile which they sell, right? So here, if you see what all mentioned, what all things they have mentioned in their revenue recognition policy is about like automotive, how they recognize the revenue for the automotive, right? What all components, natures are being there in the sales, like what is like gross sales they have, what all category of sales they make, in what all countries they make the sales. And then after, if they have any discount, if they have any incentive schemes, if they have any warranty claims, right? Or if they have any you can say future credits they need to provide to the customer. Like if you see, if you just read it out, this one, you'll see all those information are being mentioned over here, right? So I'm just taking you through high level, but this you all have. And if you want, I can send it to the group again, so that like after this class you go through how actually this notes to accounts and the revenue recognition disclosures are being made in the financial statement, right? Then if you see, they have discussed about like vehicles, how they sell the vehicles, what about their parts and accessories policies for the revenue recognition. What is, they also have like rental income, similarly like how in India we have like Ola, Uber, or maybe like nowadays Blue Car, right? Same way they do the car rental business also, right? How they recognize those car rental business, how they recognize the revenue for the spare parts and accessory. Those all things will be mentioned over here. Same way here, if you see like automotive financing business, that's their another business which company do the financing support to all the automobile which General Motors sells. Like if they are selling car or trucks or any other heavy vehicle to the consumer, consumer can avail directly the financing services from GM Finance if they do not want to go to Bank of America, Citibank, Yes Bank, or any other such bank, right? And how the financial GM Financial recognize the revenue, what is their credit policy, how much is their turnout, what is their bankruptcy, or what is their bankruptcy norms, or what is their you can say policies for the collection, all things to be mentioned over here, right? And then after, if you further go down, you'll see more in detail about the numbers also for the respective financial item. Let me show you really quick about the revenue. This was like what we have discussed earlier. It was accounting policy for revenue, right? Now look at the disclosure part of the revenue. Like in disclosure part here, you see they have done a disaggregated level of disclosure. If you see in the right hand side, General Motors North America, right? And if you see left hand side columns, what is the sales from vehicles, parts and accessory? What is the sales of used vehicle they have sold? That means second hand vehicle they have sold. Third is services and other, right? What all revenue they have generated from the services, right? And then after, if you see lease income, financing, other income, which is general motor finance income, right? In the right hand side, you see how much revenue in the respective category they have generated from North America region, how much revenue they have generated from GMI, that is GM International, other than North America. What all comes in North America is US, Canada, and Mexico. Rest of the world they have considered in GMI, General Motors International, right? And what all revenue they have generated from their corporate office. That is the total revenue of the automotive. If you see, this one is a total revenue from the automotive business. In addition to that, they have two businesses, cruise businesses and GM financial statement. What is cruise business? Cruise business is, like driverless car basically, right? So they have set up another company called GM Cruise, right? And in which they are doing all the experiment and going through all the, you can say, government approval processes for ensuring that government will approve driverless car to work, right? So for that they have created a separate entity, and that entity has generated $103 million of revenue. And now next one is like GM Financial. GM Financial give the cars on lease, cars on finance, and other income, which is like interest income, right? And then there is some elimination and reclassification. There may be some transaction between the interparty that has been eliminated over here, and this is the total revenue, right? This is called a disaggregated level of revenue analysis. Here, if you see, they have reflected all categories of their sales, like nature of sales, as well as the segment in which they make the sales, right? This is what called disclosure by the General Motor financial statement. Make sense? And then same way, if you see, is for 3 years, 2018, 19, and 20. And then after, they have disclosed contract liability, they have disclosed warranty, right? They have disclosed contract assets, right? So all these disclosure, if you see, we also need to make as per ASC 606, which we are studying from last 2-3 classes, right? Now, if I take you to the Microsoft financial statement. So in the Microsoft financial statement, if you see again, the revenue recognition policy they have made, where they have provided what all items they sell, what is the nature of their sales, what is product category, what is the service category. They have specifically mentioned this is like product revenue, right? And this is service revenue, right? What all comes in product revenue, what all comes in service revenue, and then what is the nature of product, what is the nature of services, what are the significant judgment they have made for the respective category of item, right? And what is like contract balances, the year-end balances, what is the contract assets, contract liability, what is their receivable, like asset recognized under the respective contract. All those things, like why I'm showing you, so that you know how practically we need to implement what we have studied in last 2-3 classes, and what disclosure part we are going to study today, right? Makes sense? Does it give a reflection of how we need to implement it? Yes, no?
Yes, sir.
Got it. Okay, so let's dive into the notes now, right? Now you can correlate this theory with the practical, which you need to implement in future. Now, if you see what all disclosures are being required, first one is contract with customer, right? What is the nature of contract and what is the category and type of contract you entered with the customer, that you need to disclose, right? It may be service contract, it may be sale of product contract, it may be AMC contract, right? So you need to specifically mention each category of contracts which you made to the respective customer and how they are impacting to the revenue, right? Second is revenue recognized from the contract with customer separated from other source of revenue. If you remember, in the transaction price, what all components we have understood in the transaction price is the fixed price. Then we discuss about variable price. Yes, no? Are you guys with me? What all component we discuss on the transaction price? Fixed price, variable consideration, and constant to variable consideration, right? Third, we discuss about financing component. Fourth, we discuss about
Payable to vendors.
payable to the customers, right?
Yes.
Amount money paid and payable to the customer, and then lastly any barter transaction, right? So if you remember, there in the financing component, significant financing component, what we have concluded that we need to plug it out from the ASC 606. It will not go into the contract revenue. It will go into the financing income, right? That's what we discussed, guys. Yes, no?
Yes, sir.
Huh? Same way, there might be a possibility that there is one equipment that company has given on lease, but parallelly they are generating revenue on AMC. So there might be a one contract, but it has two elements, ASC 606, which is recognition of revenue over the period of time for AMC. And the second is the recognition of revenue as per the lease accounting, which is ASC 842. Right. So what it says, second point, revenue recognized from the contract with customer separated from other source of revenue. So here we need to clearly mention how you can say within one contract, how different type of arrangements are they and how we are segregating those arrangements to come up with the what is required as per ASC 606. Right? What is required as per finance income will go in the finance income. That's a separate disclosure. What is being required as the lease income should go in the lease income disclosure. But in ASC 606, will be clearly focused on contract with customer. Make sense? Yes, no?
Yes, sir.
Okay. Then we also discuss about impairment loss, right? When we have recognized the contract asset. You remember like in the last class, we discussed about contract asset. If the contract asset market value or recoverable value is less than the book value, then we need to recognize impairment loss, right? So that also you need to disclose, right? So what you presume is being the fair market value, present value of the future cash outflow, right? And how it is being less than the book value for which you have recognized the impairment loss, that you need to disclose separately. Next one is disaggregated revenue, which you have recently seen, right? Disaggregated revenue is basically revenue by geographical or revenue by product or services or both. Geographically, like if you have seen, if you remember in this GM financial statement, we have seen the revenue disclosure part. If you see, this is called disaggregated revenue, right? If you left hand side, you'll see all the category of revenue, and the right hand side, you see all the geographical locations and the segment for the respective revenue. Right, we have some example for this also. We'll be discussing with example also this one, right? But this one is being mandatory for issuer, but for a non-issuer, it is not mandatory. What is non-issuer?
So non-public.
Non-public company, yes. Next one is contract balances, right? Contract balances is, like when you have long-term contract, which we have discussed in the last class, and you have certain balances. If you remember, we have done an example for that also. There we were having like contract assets, we are having account receivable balance, we have some unearned revenue, right? We have some, you can say, work in progress inventory also, right? Those all things you need to disclose separately. Next one is performance obligation. Performance obligation, you need to disclose how you identify the performance obligation, right? And what all category of performance obligation are generally in your total revenues, right? In your normal contracts, right? So if you remember, like we have discussed one example when we are discussing portfolio approach, right? In that we have discussed an example of AT&T, which is like similar to Airtel, right? So what all categories of, you can say, sales or arrangement they have? They have arrangement for providing network services. They have arrangement for sale of mobile. They have arrangement for sale of internet services, right? So in the respective category of services, what all kind of performance obligation they have, that you need to mention and disclose specifically, right? Next one is transaction price and allocation of transaction price to the remaining performance obligation, how you have identified, that also you need to disclose. Most important thing, where most of the auditors struggle and face challenge, or most of the CPA face challenge, is the significant judgment. So ASC 606 mandate, whether you are a private company or a public company, you are an issuer or a non-issuer, you must have to disclose the significant judgment. Significant judgment and change in the judgment made in applying the guidance to those contracts. So when you are evaluating the contract, right, there are so many judgments you may make. If you remember in the breakage example, right, we have made a judgment based on certain historical trend and the future expectation that this much percentage of points will get redeemed, right? Do you remember that example? Do you remember that example? Prashant, Rahul, Rajiv sir?
Yes,
Right? What is the assumption we have made at that point of time when we are discussing breakage concept?
Like 5% of the customers will redeem their reward points.
Right? So more than 90% will expire, right?
Yes.
And same way, if you remember, like we discuss an example of Domino's Pizza discount voucher, right? Which is material, right? Which we have discussed, right? There also we have considered an assumption like 10% of people will come back and redeem those discount voucher, right? How you have taken those assumptions, that you need to disclose. Or maybe if you are estimating any sales return, right? In US, if you see, especially in FMGC product, or maybe cloth and accessories, so there's a good policy over there, like people can come back. Like if I say about cloth and accessory, like 30 days return policy they have. So even though you have weared and you didn't like it, and you can go back and get your refund for the respective stuff, right? So how much refund or sales return you are expecting in the business? So those all are judgmental calls, which like CPA in the organization take, or maybe finance person or account person in the organization do take. So those significant judgment you need to disclose in the financial statement, what all judgments you have taken for each category. Next one is for performance obligation satisfied at point in time, an entity should disclose significant judgment made in evaluating when a customer obtain a control of from his goods and services, right? For goods and services, sometimes it is very easy because it is being most of the time mentioned in your contract, whether your agreement is, X factory or X destination, right? If it is X factory, as and when the goods moved out of the factory, you can recognize the revenue. When it is like X destination, then as and when the goods reach to the respective destination, then you can recognize the revenue. But all those terms which is being used in your business, you need to mention specifically. So, like it may be possible that for in the local sales, like suppose you're making a sales only in the United States of America, there your sales model would be X factory. But when it comes to export sales and you have a customer, let's say from UK, Australia, New Zealand, Europe, Germany, they want their product at the port, of their location, and then they do verification, quality testing, and then after they approve, right? In that case of scenario, it is X shipment, right? So here you need to recognize the revenue when the material reaches to the port of the customer and customer approve the quality, right? Those all things you need to specifically mention. Like for the local revenue, we recognize X factory, and for export revenue, we recognize on X shipment basis, right? Next is for performance obligation that entity satisfy over the time. So there you need to disclose the method used and explanation why the method provide most faithful depiction of the transfer of goods and services. So you need to give an explanation to that. So if you remember when we were discussing fifth step of revenue recognition, right, there we see like there are two methods, point in time method and over the period of time method, right? First, we always look at over the period method. If over the period method would not apply, then we'll go to the point in time method, right? But when you are evaluating over the period of time method, so then you need to disclose what method you have used, right? And why that method is the best use, which give a faithful depiction of the transfer of goods and services over the period of time. So for example, if you see here, the transaction price and amount allocated to performance obligation. So method we have discussed in that input method and output method, right? Hope you remember. So there also we have discussed an example for input method like your electricity, right? Electricity company do billing to you based on the electricity you consume, right? And another example for the output method we have discussed about like offshore company. They do billing to the company based on number of hours their respective employees spend, right? Hope you remember those.
Yes, sir.
Yes,
Everyone?
sir. Yes, sir. Yes,
Hmm?
sir.
Okay. So methods, input, and assumption used, and all of the following information related to that. First one is how you determine the transaction price. Second one is how you are assessing whether the estimate of variable consideration or constraint, how you are allocating the transaction price or allocating the discount, and the measuring of obligation for return, refund, or other similar obligation. Those all methods you need to be clearly mentioned. Next is performance obligation, disclosure relating to the performance obligation. Any doubts so far? So far, so good?
Yes, sir.
Rahul, Prashant,
Yes, sir.
Rajiv
Yes,
sir,
sir.
Ananya, all good? Okay. So next is performance obligation. When entity typically satisfy its performance obligation, that you need to mention, like we were discussing earlier example also, like upon shipment, upon delivery, right, as in services are being rendered, or upon completion of services, that we need to clearly mention over here. Next is significant payment term. So in your business, what is your normal receivable cycle? Like, like for example, if you see about medical industry, I mean to say, let's assume hospitals, they all have like advanced business. They do not have much receivable, right? Whereas if you see like some manufacturing company, they have generally 45 days, 60 days, 90 days credit to their customer, right? So whatever is your business collection cycle or average payment term, that you need to disclose. There might be a possibility like for the local, you might be selling for 10 days or 15 days credit, or for international businesses, you might be giving 60 day or 90 days credit. And then you need to disclose both separately. For international business, we take this much credit, we provide this much days of credit. For local business, we provide this much days of credit. The nature of goods and services that the entity has promised. So it's about nature of goods and services which you offer. If you are a manufacturing company, then what all goods you are producing. If you are a service company, what all services you are providing, right? Then obligation for refunds or return, that is similar, and type of warranties and related obligation. So warranties are of three types. One is like performance warranty, second is financial warranty, and third is extended warranty, right? If you remember in our last example when we were discussing about car sale, right? So if you remember in that example we were discussing sale of car, sale of insurance, sale of extended warranty, right? Where it is extended warranty that you need to disclose separately because it's a separate category of sales. When it comes to standard warranty, or you can say performance warranty, for that you need to recognize the obligations. And when it comes to financial warranty, that you need to give as a disclosure in the notes to accounts, right? Any doubt on the performance obligation? What all disclosure we need to make? So far, so good.
Sir, what is the first one? Financial warranty.
Financial warranty is like a guarantees also. For example, like you purchase. Let's assume I'm a new manufacturer and I produce a new home automation device. Let's say, right? And you are my customer, and you purchase, let's say, for $20,000 some home automation product from me, and I give you the financial warranty that within 30 days, if you return this back, then I'll give you money back, right? And if this cause any loss to you, right? For example, if you have done like all home automation product and unfortunately you struck into the home and lock is not opening because of like some error in the home automation, and then you get into different troubles and you end up incurring certain losses, then that company has given you commitment that they will take care of financial losses. So that's like very rarely used, but just for your information purpose.
Okay.
Next is remaining performance obligations. How much performance obligations are still remaining at the balance sheet date? That you need to disclose only if expected to be remaining for more than 1 year. If it is just like immediate, for example, on 31st evening, someone has came and given you order on 1st of the next month, you are delivering it. So that is not required to be disclosed. Only disclosure required for the commitments or obligation which is being due more than 1 year or expected to be delivered after 1 year. For example, like construction contract, right? Do you remember that example we have discussed for construction contract? 3 years contract, right? After first year, in the first year of balance sheet, you need to disclose what is the remaining performance obligation for that contract you have. Same way, like in the IT contract, right? Some of the contract are for couple of months, some of the contract are for, you can say, couple of quarter, but some big contract are maybe of 2 year, 3 years, or 5 year times, right? So when you have long-term contract, then you need to disclose the remaining performance obligation. Next one is aggregate amount of transaction price allocated to the performance obligation that are unsatisfied or partially unsatisfied. So if you remember in the contract example, like construction contract example, in that we have seen how much is the money, or you can say how much is the transaction price you have recognized as the revenue, and how much is the balance which you will be recognized in the future period, right? When you will be recognizing that in the future period based on the future satisfaction of the performance obligation, right? That you need to disclose separately. An explanation of when the entity expect to recognize, like in 1 year, 2 year, whatever is the time frame of the contract in which you're gonna recognize that revenue, that you also need to disclose, right? So this is about performance obligation and remaining performance obligation disclosure. Then there are certain additional disclosure requirement which are recommendatory for non-issuer but are mandatory for issuer. First one is any assets recognized from the cost to obtain or fulfill the contract with customer. Right? At any point of time, if you have recognized any asset, like do you remember like contract asset, which we have discussed, which is being what all include in the contract asset cost? What is contract asset? Do you guys remember? Pulak, Ananya, Avneet, Rajiv sir, Prashant, Kashish, Rahul. Do you remember what is contract cost, which we have
सर
discussed?
पढ़ा तो था याद नहीं आ रहा.
What all comes in the contract? What is contract cost basically? You know, if I say very basic question. Rahul, do you remember? You're not going through the notes.
No, sir.
You said you've gone through the notes. It's being very much clearly mentioned in your notes. Prashant, do you remember what is contract asset?
No, sir.
Rajiv sir?
Yeah, contract asset is something which is the main part of the contract and
No,
which
sir.
is agreed.
No. Contract asset, we can recognize the amount we spend specifically to obtain that contract, like tender fees, legal fees, right? Agreement drafting fees, right? That we have discussed, right? Kashish, Prashant.
Sir, could you please repeat एक बार sir?
Contract assets are those assets which we have specifically invested or expended the money to obtain a particular contract, right? Like tender fees, legal fees, contract drafting fees. You remember, like we have discussed, like example also on this. The dam tender example we have discussed.
Yes, sir. Got it.
So,
Yes, sir.
so any expenditure, you know, your sales team has incurred, or you're giving specifically commission or brokerage to someone, right? So those costs which you are expected to be recovered over the period of contract, and contract is of more than 1 year, then you'll be recognizing that asset as a contract asset, right? So this is what additional disclosure required. Any asset you have recognized from the cost to obtain or fulfillment of the contract with the customer need to be disclosed separately, right? And the judgment made in determining the amount of cost incurred to obtain and fulfilling the contract. Right? What all costs, you know, you might have incurred so many costs, but what all costs are being specifically to obtain that contract? How you have identified them, that you need to disclose, and the method you have used to determine the amortization, like in how much period you'll be amortizing that cost, and what method you'll be using: straight line method, usage based method, output based method, right? And then closing balance of that asset and expenses or impairment loss. All those things you need to be disclosed separately. Right? Make sense?
Yes, sir. Got it.
Next one is disaggregated revenue. So if you remember, like in the General Motors example also, we have seen like the big table of disaggregated revenue. What is disaggregated revenue is all about? Disaggregated revenue disclosures means you are segregating the revenue from the management perspective in different segment and different nature, and analyzing it at a piece of paper, which management analyze generally for their business. That you need to disclose as per ASC 606. What all things you need to be considered when you are making such disclosure, type of revenue and type of services, whether it's like products wise, service wise, right? Second is geographical location, region wise, Americas, North Americas, international, right? Then market wise or type of customer wise, it may be government customer specific product only for government customer, specific for non-government customer, specific for OEM, specific for retailer. You know what is OEM? Any idea what is OEM?
Original equipment manufacturer like
Yes,
GM.
absolutely. Yes, absolutely true. Original equipment manufacturer, right? Whether you are selling to OEMs or whether you are selling to the reseller. Type of contract, you have fixed price contract, you have time-based contract, you have material contract, right? Contract duration, you have short-term contract, long-term contract, point in time, over the period of time, right? Timing of transfer of goods and services. Last one is sales channel, like D2C or through intermediary distributor channel or retailer channel, right? So these are the certain ways. Some of the ways can be applicable to your company or to your client. So you need to identify what all things is being applicable to your company or to your respective client. So this is all like illustrative examples. But there may be like a number of other permutation and combination for disaggregated analysis of revenue. If you see the example over here, segment, if you have seen like primary geographical segment, major goods and services, timing of revenue. If you see the segment side, we have consumer product, we have industrial product, we have supplies, and the total sales. So this way you can represent the disaggregated revenue analysis. If you see the geographical wise look allocation of revenue, North America, Europe, Asia market, how much is the sales of consumer product, how much is the sales of industrial product, how much is the sales of supplies, right? And if you see the major goods and services, what is the sale of X, Y, and Z in consumer product, industrial product, and supplies market, and what is the timing of revenue, how much revenue recognize over the period of time and point in time, right? This is called disaggregated analysis of revenue. Any doubt here or anything you guys need more clarification? So far so good?
Yes, sir.
Hello?
Yes, sir. Clear.
Pakka?
Yes, sir.
Okay, so next one is contract balances. Contract balances disclosure is also not mandatory for non-issuer. It is being mandatory for issuer, but not mandatory for non-issuer. So first one is revenue from long-term contract. Example, construction contract, infrastructure project like railway line, roads, dams, bridges, or IT implementation project. Second is performance obligations satisfy over a period of more than a year or operating cycle of the entity that you need to disclose separately. Revenue for long-term contract is recognized over the time when one of the following three criteria are met. So when do you recognize the revenue for a long-term contract over the period of time? When one of these three criteria are met. First one is customer simultaneously receive and consume the benefit provided by the entity's performance as the entity perform. If you remember, this is 100% same what we have discussed in the revenue recognition step 5, right? If you remember over the period of time, right hand side box, if you remember. So these are the similar three conditions were there. Second is entity performance create or enhance an assets such as work in progress that the customer control as the assets is created or enhanced. For example, real estate contract, work performed but not approved considering the work in progress. Or you remember like ambulance project, right? Those all comes under the entity performs and create or enhance the asset specifically for the usage of the customer. And third thing is assets created can be a tangible or intangible, like research and developments. Third point is entity should use indicator of the control to determine if the customer gain control of the assets as it is created, like IT implementation project, SAP implementation of FI module first, then inventory module second, then HR module, then sales module, right? Existence of any you can say implicit promise made to the customer should also be considered. When an entity performance does not create an asset with the alternative use to the entity that have enforced right to the payment. So if you remember, this is 100% same what we have studied in the revenue recognition criteria step 5. This is first one. This is second point, and this one is third. Are you guys with me?
Yes, sir.
Yes, sir.
Shall we do some
Yes, sir.
practice question if it is getting too dull or monotonous going
Yes,
through
sir.
theory?
Yes, sir.
Okay, let me just finish off this paragraph and then we'll do some practice question. Just this 2 paragraphs more before jumping into the installment sale, which is like new topic. We will do some practice question. If none of the 3 criteria are met, then revenue is recognized at point in time. This is 100% same what you have studied in the revenue recognition criteria of AS 606. Step 5. Entity must not able to reasonably estimate its profit. So appropriate measurement methods. So you need to disclose the measurement method, output method or input method. Like example which we have already discussed, like unit output method is like which is, for example, work performed, like number of hours incurred on IT project, number of hours incurred on offshore project, right? Number of units you have produced or number of units you have delivered, number of flats you have delivered, number of milestone or number of miles of road has been constructed. So that is called output method. Input method is measures such as resources consumed, like how much is the labor hours I have incurred, right? How much is the cost I have incurred? How much time has been lapsed to satisfy the performance obligation? Like for real estate or infra project, if you see percentage of completion method is based on the approved cost, right? So that also we have discussed an example for percentage of completion method, right? So that is based on the input, like how much is the cost is being approved by the certified engineer. Do you remember that construction contract example which we have discussed in the last class?
Yes, sir.
Or let me see if I have that. Let's see if we have that or have we deleted it. So I think we have removed that from the Excel sheet, but I think in the notes you have that. Yeah, this one, right? Do you remember this example which we have discussed?
Yes, sir.
Yeah.
Sir, could you please share the notes for today's class?
Yes, definitely.
क्योंकि सर वो फिर इकट्ठा हो जाएगा तो फिर ढूंढना मुश्किल हो जाएगा.
No, I think for last class I have shared.
Till last class you share.
So I'll send this updated.
ठीक है.
Okay. So if the progress cannot be estimated, The entity can use point-in-time approach or recognize the revenue based on percentage of cost incurred to the date over the total estimated cost, similar to percentage of completion method. Material that has been purchased but not yet installed should be excluded from determination of progress, right? Remember that construction example, right? You have purchased the raw material, but the buildings have not yet been built, right? So cost which you have incurred is actually a work in progress. That is not the cost for which you will be recognizing revenue. You will be recognizing the revenue only the you can say stories or building or construction percentage of completion has been done, right? The customer gain control over the goods before receiving the related goods or cost of significant in relation to the total expected goods produced from the third party with the entity not significantly involved is in design or manufacturing. Let's do some example. Then we will jump into the installment sale, which is another category of disclosure required. So we are in